South Africans who have immigrated and earn over 1 million rand will from next month be required to pay income tax in South Africa. The new Expat tax is an amendment to the Income Tax Act and will ensure that those who have immigrated are taxed according to South Africa's requirements. Consumers also need to make a plan on how to handle their savings, retirement and insurance policies when immigrating.
South Africans working abroad are currently entitled to a tax exemption provided they are physically outside the country for 183 days. This does not apply to individuals who are contractors or self-employed. There are countries like Dubai where income taxes are not raised on an annual basis like in South Africa. This means South Africans living in those countries end up paying less tax than those who live here. Now with the new amendments, South Africans working abroad will only be exempt from paying tax on the first 1 million they earn abroad. Those with retirement or provident funds will be allowed to withdraw their pension before the age of 55 when immigrating. This means that those immigrating must preserve their pension fund to ensure that they have sufficient income when they retire. When you decide to cash in your unit trust or shares, you will be required to pay capital gains tax. You have the option to cancel your life cover in South Africa, but it might be worthwhile to keep it, especially if you were underwritten when you were much younger and healthier. With regard to living annuity, which is an investment that you utilize when you are retired, you will not be allowed to withdraw the capital, even if you have formally immigrated. Naledi Matlapeng, SABC News, Johannesburg.
Business Tech reports that last year about 8,200 people immigrated. That's from April 2018 until April 2019. Maggie Ntombela, who's an associate director from Deloitte, joins me in studio for advice for people who may be considering this. Thanks so much for your time on SABC News. So what's the one piece of advice that you'd give to people who are considering immigrating?
I think let's just start by unpacking as to what this means. So basically this change, it applies for people who are already working outside of South Africa. And the panic comes in that in the past they would be exempt. So if they meet those two requirements, the 183 and 60 days continuously in a 12-month period, then their employment income would be exempt. So the change, what it's saying because you are a South African resident, you are taxed on worldwide income, will only exempt you up to 1 million. And the difference, it's going to be taxed. And obviously, you would have been taxed on that same type of income wherever you are working. And then what SARS is saying is that would allow you the credit for the taxes that you would have paid, obviously going through the limitation of how much can be allowed. And then there might be a shortfall. For example, if you go to a country where the taxes are 20%, and in South Africa, the highest it's 45%. So there might be a shortfall. And that also brings in any benefits that you might be getting from wherever you are working. Those will also form part of your remuneration in South Africa, or the income that will be subject to tax.
Okay, so those are the ramifications of the changes in our tax laws.
In our tax law, exactly.
Okay, for people who earn 1 million rand and over. So if you are immigrating, or if you're already currently overseas at the moment and you're looking at financial advice for yourself, what would that piece of advice from you be?
Okay, for South Africans who, as a result of this change, would decide that they want to immigrate. I know there's people say that you must financially immigrate, then you'll be out of the South African tax net, but then that's not really the case. So when you financially immigrate, all that you are doing is for Reserve Bank purposes, that you want, not to go through what we go through as South Africans. Whenever we want to send money across, we need to go through the Reserve Bank and approval and get approval for that. So that's for financial immigration. That doesn't take you out of this taxation net. So for you to be out of this taxation net, that means that you need to cease to be a South African tax resident. And also there are requirements that need to be met for that to happen, and also there are financial implications for that. So when you cease to be a resident, all it means is that all the assets that you've got globally, they would need to be, you'll need to check the market value of your assets up until the day before you cease to be a resident, and you paid a capital gains tax deemed disposal. So you are not actually disposing those assets, but yet you have to pay the tax on those assets. The reason for that, the view is that when you cease to be a resident, you'll no longer be taxed on worldwide income, but only on South African source income. So SARS wants to get their share of your wealth or the growth of your wealth up until the day before you leave. So those are the implications for people who work abroad. And if they decide that they want to cease to be a resident, then that will be the additional implication for them financially.
Okay. There is a perception, rightly or wrongly, that South Africans who are perhaps higher earners than the majority of people in the country are very reluctant to pay tax because they feel overtaxed and they feel as though also their money may be wasted when it comes to tax. What is the compliance like, especially in the higher end earners? From the experience or what the high net worths that we deal with, people are coming forward. They do want to be compliant. And also when it comes to SARS as well, they are making sure that people are compliant. So with all the penalties that get levied, so everyone does want to be compliant. When we talk about immigration as well, there isn't a proper sense, from my understanding, of statistically knowing that X amount of people are leaving the country, X amount of skills are leaving the country with them. Is there a database where we can look at that information and what skills perhaps are being lost and what skills are here that can make up for those people who are going? I think on that note, with the changes that are happening, it's already for people who are already working outside of South Africa. Okay. Yes, the challenge might be that, you know, with these changes, they might make a decision that, okay, I'm not going to come back to South Africa, I cease to be a South African resident. As to the stats, there should be databases with all those stats, but then I think we need to bring it back into context that it's people, some of them are working for South African companies, but then because of all these changes, you know, they might change, they like have to make other decisions for them to be able not to be hit with all these changes that are coming up 1 March. Maggie Ntombela from Deloitte, an Associate Director, thanks so much for your time and helping us understand the tax implications of immigration for people who earn over R1 million a year. It's over now to On Point SME.